there really was a lot of news. And, the spring of 24 or the summer of 24 sounds like, what did you do last summer?
That's right.
We saw some economic news here that really had us talking this week.
It did, because it's interesting how the economic data, when it comes out, there's been a lot of talk lately about the revisions to the data, right? So the economic data, it's always telling you about what happened, but it's based on a sample. Sometimes people answer the question, sometimes they don't. Over time,
kind of like my kids.
Oh, that's right. But thankfully, sometimes with the government data, they end up giving you an answer. It might take a few months, right? So that can give some revisions. But then they also do this thing called a benchmark revision. So in the news, the Bureau of Labor Statistics with the jobs report, they reported that based on a census of businesses from April of 2024 to March of 2025, so way back then, that, they overestimated the level of employment by 911,000.
That's a big miss, right?
It is. Yep.
I mean, that's the whole side of the barn.
That's right. Yeah.
And by the way, it leads into, I joked earlier in the year about BLS is BS. You remember that whole thing?
Yeah.
But here is more information where they missed it by a mile, and I'm not sure why.
Yep.
Now, there's a new person who's heading that right now. They can't go back and change what they did, but this information has been interesting, and now the BLS has to change their numbers.
A couple things here. Number one, they did announce that the Inspector General, so it's kind of, they have these independent watchdogs for different agencies. The Inspector General is going to launch an investigation as to what happened and why, and maybe come up with recommendations.
I hope it's not Clouseau.
That would be fantastic.
Yes.
Or Mr. Magoo, maybe
Exactly.
that instead, perhaps. But so that's one thing. The new head of the BLS, there's an interim head, because we do know that the former commissioner was fired. There's an interim head who has been there for probably about 8 years, and there's likely going to be the confirmation hearing for the who Trump has nominated within the next week or two. So the papers have been filed, so there will be some changes. Maybe they'll be able to get the data to be a little bit more, if not accurate, just more transparent.
That's the key. To me, that's been the issue all along. Just be transparent. So, we wake up and say at 7:30 a.m. when we're supposed to get that report, and we're all leaning on the end of our chairs. We are.
Yeah.
Our clients aren't. But, that if there was more transparency to it, we wouldn't have to do that.
Yeah. If for listeners, if you've ever read through the actual release, at the bottom in the footnotes, that's where it starts describing the sampling error, the variability. They could make that a little bit more transparent.
Yeah, I
So
agree.
I think that there are some improvements that could be made, are likely to be made, that aren't necessarily going to be, saying that the old numbers were completely wrong or anything like that. But going forward, it'll be nice to have a little bit more reliable data. That's one of the reasons why we tend to try to triangulate on the truth. Use the government
on the truth.
That's right. It's one of my new catchphrases.
I like it.
Where you can get the government data, but then you try to corroborate it with private sector data, and then also what are the markets doing? How did the markets react? And there's a lot of information you can glean from these variety of data sources.
And so all of this, really, we're talking around it, but the reality is, last summer, we had a slowdown.
We did.
And you and I talked about, we feel like we're in a slowdown, but the economics aren't telling this.
Yeah.
Now, looking back in the rearview mirror, it sure looks like we were right at the edge of a recession.
I know. And the market was, I think, confirming what our view was, that we were going through a slowdown. The data confirms that the spring of 2024 was a period of time in which small businesses, you had fewer job creations because you had fewer businesses forming, and then you also had more businesses closing. The Bureau of Labor Statistics didn't capture that with their sampling because they can't sample something that's not there.
Yeah, right.
And as a result, now they know that it was, so we've had to do this course correction. You could say we had a mini recession back in the spring of 2024, which I think is really important from an investing perspective, because it likely means that despite some of the volatility in the data that we've been seeing lately, that's typically when you get a rebound or a recovery, right?
And we saw that, though, right starting from the beginning of the tariffs in April of this year to where we are right now, which is substantial. S&P almost 6,600. So, but this all leads to our conversation that is going to be headline news next week, and that's the Federal Reserve meeting. It's all but for sure, right? 90+% chance that they will lower at least a quarter point. There's an outside chance, very small percentage, that it could be 50 basis points. I think that would scare the market more.
Yeah.
But maybe 25% in September and followed by another 25% in October. Do you agree with that?
Oh, I do. And I think that the idea that if the Fed did more than 25 basis points, it could be taken as a bad sign, like,
Right.
we really
boy.
messed up
Right.
with kind of taking evasive action here. And the safer route would be do 25 basis points in September and send a signal that, yes, we're going to stay data dependent. We're still kind of watching developments and all that, but likely going the balance of risks suggests that maybe in October, again, they can cut, and then possibly again in December. But a lot can change between now and then.
You know, I had a conversation earlier this week about what does that send, though, to the market, right? Because there are still, prices are high.
Yeah.
And if you have trying to feed your family, right, prices are still higher than the Fed wants. So they have this dual mandate, these two jobs. I know you always argue there's a third job, right? But this dual mandate is price control, inflation, and the slowing down of the market. So they are in a conundrum.
They really are, because if you have the economy slowing down, that would argue for rate cuts. But if you have inflation that is high and possibly moving higher, that would call for rate hikes.
You got it.
And so that's really the dilemma for the Fed. Now, that's where it's really important when they talk about the balance of risks. Which one is more important? And I think that what they've been talking about lately is that any inflation that we see coming from tariffs is likely to be, we're not going to say transitory, because
they did use that word.
They did.
I know they did.
But it's likely going to be the slow simmer higher and then kind of petering out with the inflation.
I don't think they're going to say slow simmering higher while petering out. I think they're going to stay with transient.